Hey there, my name's Curtis Lucas and you're watching Empire Building. In this episode, we're going to be talking about Ethereum again because currently, as far as the price is concerned, it's positioned to make a very strong move. It is not screwing around. So let's have a look at what's going on and what we might expect in the near future. The move from last night has sent Ethereum considerably higher, up just about 6% from where we were yesterday, versus Bitcoin that hasn't really moved at all. It's in the same place we were. It's been trying to move higher, but not with a whole lot of success as it stands right now. Ethereum to Bitcoin, which is a chart I do try to pay somewhat close attention to, has reached the bottom point and is currently surging quite a bit higher. We're nowhere near the highest levels it has been. Even just earlier in the month, we were quite a bit higher. Ethereum was showing a lot more strength in relation to Bitcoin. But mainly what we need to be paying attention to here is what is happening on the longer term charts. Ethereum currently is just approaching the downtrend line that it has formed following the last breakout we had connected to the original all-time high. So this is a very important level for Ethereum currently. Bitcoin, by comparison, has already broken through that barrier. And now the only resistance it has left is reaching and surpassing its all-time high at about $65,000. So across the board, things are looking very strong, whether you're invested in Bitcoin or Ethereum. And of course, what's good for Bitcoin and Ethereum tends to be good for the altcoins in general, but these two tend to lead the way. But one other thing to take note of is that I've mentioned this many times. Ethereum is not as mature an asset as Bitcoin is. Ethereum still behaves more like Bitcoin did 4 or 5 years ago. And you can tell that by simply looking at this most recent chart action, especially during this period when Bitcoin reached its top. We had this, what's now become widely accepted as its Wyckoff distribution. Ethereum doesn't have a Wyckoff distribution. Ethereum is still behaving a lot like an early cryptocurrency asset. Instead, we had this massive blow off top during that last cycle. So odds are Ethereum will witness something more like that again. Whereas Bitcoin, it's a whole lot harder to move that market, which simply means that Ethereum can move a lot faster. It's just the nature of the beast. This is why I've always said that Ethereum is riskier than Bitcoin, but also provides a far greater potential reward for those willing to take that risk. I suspect once we break through this line, this downtrend, it won't be long before we're back at all-time highs. I don't think it's going to put up too much of a fight, and frankly, there's just not much holding us back at this point. Of course, I have to be careful because I've been wrong about these things before. As always, this isn't financial advice. It's fun to look at these charts and everything. But one thing that running a validator node has taught me is inactivity tends to be the better option. I've seen someone down in the comments asking if they made a mistake actually choosing to run a validator node and locking those funds up because maybe they might miss the opportunity to sell before the bear market sets in. Now, whether or not that is true, I can't really say. But even if it is, I don't think it actually matters that much. You're never going to know exactly when that top occurs. But I understand the concern of not having the ability to make that decision. But speaking from my own personal experience, in the long term, simply choosing never to sell usually turns out to be the correct decision. Even if you do time this top correctly, odds are if you're in the habit of doing that, eventually you'll find that the overall performance of your account just doesn't measure up. So what this overall experience has taught me is, especially if you're running a validator or have some of those funds deposited in some sort of DeFi contract that provides yields, In the long run, that will always overperform, because not only are you invested in something that has long-term promise of future growth, you're also generating yield in that same underlying asset, whether it's Bitcoin, Ethereum, or something else. This is why I choose to invest in the one thing I think has the long-term guarantee of success. I say Ethereum is not screwing around because it is the category winner. And I'm not talking about Bitcoin and Ethereum. As I've said many times, they don't compete with one another. They don't service the same market, the same purpose. But you do have many other cryptocurrencies out there vying for Ethereum's position. Just as at one point or another, there were many other cryptocurrencies vying for Bitcoin's position. They all failed. And they failed because they could not differentiate themselves enough from Bitcoin. And Bitcoin was already the category winner. Except for Ethereum, because it did differentiate itself enough from Bitcoin to be successful. Now, it isn't currently as successful as Bitcoin, and I'm still of the opinion that one day it could be. There's the potential that one day Ethereum, at least in terms of market cap, could reach the level that Bitcoin is at parity, or perhaps even for just a little while, even surpass it. But even if that happens, it's not taking anything away from Bitcoin. It's not going to replace Bitcoin because it can't. It's just different. And my opinion is that all of these other smart contract platforms that are doing some innovative work, and in many cases, you can't deny that the technology behind them might be superior to Ethereum, but it doesn't matter. It's not good enough to be just a little bit better, to be just a little bit faster or a little bit more efficient. When you come this late to the party, being a little bit better cannot disrupt the incumbent. To overthrow an incumbent technology, you have to be able to disrupt them on many orders of magnitude. You have to be fundamentally different. You have to effectively shift the entire paradigm, completely turn things upside down. And none of these other competitors can do that. Yeah, they have lower fees. And that's what gives them value today, because they service a need that Ethereum currently is not capable of providing. But when we're talking about big money, when we're talking about all of these other institutions that are entering this space, many of them came through the door through Bitcoin first. And many of them are struggling with Bitcoin's energy consumption. But now they're definitely got their eye on Ethereum. And they're all aware that the efficiency of the energy consumption of Ethereum will change soon enough. And as we get closer and closer to that, we're going to find a lot of these institutions will flow into this space, because it also provides them with the benefit of accessing these yield opportunities, whether that be through staking or some other DeFi means. There's now over $95 billion currently locked up in DeFi. When you combine that with the amount of Ether that has been growing over this entire period, the amount of Ether locked in staking, running validator nodes, this chart only goes in one direction. And when you combine them, it brings it closer to $125 billion. That accounts for nearly 30% of Ethereum's total supply. So you have to start to ask yourself, what happens when that reaches 50%? What happens when the majority of Ethereum's total supply is locked up in decentralized finance or staking? What happens when Ethereum goes full deflationary? When its supply begins to drop, as will happen when Ethereum finally moves to proof of stake and mining ceases. Things are going to change dramatically. Now, all of these things are not going to happen all at once. So many people may be thinking, well, how do we know this isn't already priced in? There's no way to know that for sure. But when I look at something like Ethereum and the potential promise of its future on a worldwide scale, it's hard not to be bullish. And as I mentioned, I look at Ethereum's growth trajectory more like Bitcoin's, but 6 years ago. Ethereum is still working out its kinks. It's not perfect, but it doesn't need to be perfect. It really just needs to be good enough. And while in the interim, a lot of the retail investment and people that are trying to conduct some of those smaller scale transactions, it's going to be easier for them to use some of these other blockchains, which is good. This is a good thing because it gives those other blockchains time to be able to experiment with new technologies. We don't know how many of those things are going to be effective, but there's definitely value in giving them the opportunity to try these things out. I've said before, you should look at these things more like experiments than investments. Some of them might prove valuable and find a niche, a service that they can provide, even with Ethereum occupying the majority of that space. But me personally, if I'm going to look at something long term and lock my money up in that, I'm going to choose the category winner. Ironically, this was an argument that someone I follow and respect quite a bit, Chamath Palihapitiya, an argument that he used for why he chose Bitcoin and just pretty much ignored everything else, including Ethereum.
Well, I was also curious. So do you see merit in any of the other crypto assets, in particular Ethereum?
No. The gains typically go to the winner. If you believed in smartphones, you could have bought a basket of things in 2010 or 2008 or 9 when the iPhone first got released. You could have bought, Nokia and Motorola and Samsung and HTC, or you could have just bought Apple. And Apple, frankly, just crushed everybody else. The point is that in any market, when there's a clear winner, it's not that these other things can't win, but there's a weird psychological effect that almost drives these second and third tier winners, which is a desire by people almost out of this sense of insecurity to not want to admit that there's a winner simply because they weren't the one to pick it first. And so what they do is they create these convoluted narratives and theses to basically anoint other winners. And yeah, can they win? Sure. But do they ever win like the category killer? No. I mean, do you really want to be long Lycos and DuckDuckGo, or did you just want to be long Google? And again, it goes back to when things tip and go mass market, the average buyer makes the simple decision. And the simple decision is to go to the category defining winner and then set it and forget it. And so if you really want to make the money, my view has always been you find the one that's about to win: Facebook, Microsoft, Apple, Google, Amazon, and you buy it.
But since then, he's certainly changed his mind because, as he admitted, he had no idea what else was happening in this space.
And I was also curious, have you been watching what's been going on in DeFi?
I don't even know what that is.
Oh, okay. Well, then.
But I own Bitcoin. Boop.
I can't really blame him for that because it changes so quickly. He's also admitted that his attitude towards his investment in Bitcoin was set it and forget it. Don't look at it. Don't pay attention to it. And that is an admirable quality. His mind was focused elsewhere. He didn't realize what was happening while he was gone. But he thought, who cares? I've already got Bitcoin. But once he reevaluated that, he understood, hey, wait a minute, there's something else here. Ethereum's not the same as Bitcoin. So it can also be a category leader. It's just a different category than Bitcoin and much earlier in its development. So my take on all of this is that by the end of this year, a $10,000 Ethereum is very reasonable. I do think that November is going to be a massive month for cryptocurrencies. A lot of anticipation, a lot of excitement over the possibility of an ETF being approved between now and December, most likely in December. But of course, we have the futures ETF that'll probably get approved next week. So no doubt that's going to have a large impact on prices in the very short term. But as long as you've got a longer time horizon on your mind, it really doesn't matter what happens in the short term unless you're not currently invested, in which case, yeah, you've got to make some decisions. Of course, as always, if you're just dollar cost averaging, which is the best thing that you could be doing, with any of the excess money that you've got, little by little is a sure way to make sure that you've always got that benefit. And that's one of the main reasons why running a validator or staking your ETH provides one of the greatest opportunities, because it's dollar cost averaging for you. And what can be better than that, especially in the long term? And one more final thought on this is that I don't think we're going to see bear markets like we have in the past. Most of that was guided by Bitcoin's halving cycles. And I'm of the opinion that those halving cycles are not going to have the impact they once did. Mainly because there are different players in this market now. That doesn't mean we won't get pullbacks and dips and crashes and FUD cycles and all of that stuff. But if anyone thinks we're going to get another long 2-3 year prolonged bear market, there's too much money out there waiting to get in. And this space has now reached its critical escape velocity. It's changing too quickly. There's too much innovation happening all at once for it not to be recognized. So in that environment, I would much rather just stay invested and continue to dollar cost average as time goes on. And the best way to be doing that is to be earning yield on your existing investments. So take solace in that. That should give you a sense of peace, not anxiety. And instead of stressing over what the price is going to do next, look for ways to earn and increase that income. I don't mention this as much anymore, but that was the point of my channel, was to discuss ways to build your empire while your money is working for you. Figure out a way to increase your cash flow, gain more income, increase that investable income over your living costs. That's how you grow your wealth. That's how you grow your empire. It's a lot of hard work, but those incremental changes is what compounds over the long term. If you're just trying to grow your wealth through buying low and selling high, you have to deal with all those choices in between that in hindsight didn't work out for you. So the impact on your wealth isn't incrementally in one direction. It's all over the place, up and down. But if all of that energy instead you put into finding ways to incrementally improve your cash flow every single month, and then you use that to dollar cost average into your long-term investments, that's how you succeed. I'll admit that it's not quite as exciting, but it has been proven successful. That's all for this one. Now let's get back to empire building.